Hello and welcome to Business Morning right here on Channels Television, where we bring the markets to your screen and the economy into sharp focus. I'm Will Ibong, standing in for Laddie Williams, and today we're tracking the trends and still staying on track with President Tinubu's 2-year in office reforms and decoding what they mean for your money, your business, and your future. But first, let's get on with its top stories, shall we? Oil prices, we're checking with oil prices first. They were on track to end the week down more than 1% on Friday. We see it as 0.41%. Brent was down to $63.89 per barrel. We see WTI at $60.67 a barrel. Now, Brent crude slipped 26 cents. We see U.S. West Texas Intermediate also slipping 27 cents. Now, the Brent July futures contract is due to expire on Friday, but we're seeing the U.S. President Donald Trump's tariffs to remain in effect after a federal appeals court temporarily reinstated them on Thursday, reversing a trade court's decision on Wednesday to put them on immediate block on the most sweeping of the duties. Now, the block had sent oil prices falling more than 1% on Thursday as traders weighed its effects. Analysts said uncertainty would remain as the tariff battles work their way through the court system. Now, members of the Organization of the Petroleum Exporting Countries and its allies, a group known as OPEC+, are expected to decide on a July oil production hike when they meet on Saturday. Now, Nigeria's broad money supply, let's check in on how that is faring. The M3 climbed higher to a record 119.11 trillion naira last month, and this is according to the latest money and credit statistics from the Central Bank of Nigeria. Now, the amount, which marks one of the sharpest monthly expansions, represents a 4.3% rise from 114.22 trillion naira recorded in March this year, and a 22.9% year-on-year increase from 96.97 trillion naira in April last year. Meanwhile, analysts say with both M3 and M2 rising above 22% year-on-year and narrow money growing over 6% month-on-month, the CBN MPC could face a tough choice maintaining its tight monetary stance. Now let's check in with the AfDB. We see new leadership there. Mauritania's Sidi yesterday been elected president of the African Development Bank AfDB Group. Attar was elected among 3 other contenders at the bank's annual meetings held in Abidjan, Côte d'Ivoire, by the bank's board of governors, comprising finance and economic ministers or central bank governors of the group's 81 regional and non-regional member countries. This comes as Nigeria's Dr. Akinwumi Adesina takes a bow after serving as the president of the multilateral finance institution after a decade in office. Our business editor, John Mekwa, has the report.
4 days of intense meetings, considerations, and asking the question of who can best handle the future of the African Development Bank. Well, the climax of the 2025 annual meeting has been reached. The responsibility lies with the Board of Governors, which is the highest decision-making organ of the group, appointed by each member country from the 81 regional and non-regional areas. The body went through 4 rounds of voting in the 4 days, eliminating candidates with the lowest vote in the first 3 days of the exercise, leaving 3 of the 5 candidates for election. And finally, the president-elect of the African Development Bank Group is revealed. The Mauritania candidate, Sidi.
Now let us go to work. I am ready.
He clinched the winning position with a 76.18%, far beyond the required 50.01%. Mr. Tar is the former president of Arab Bank for Economic Development for Africa. He's also a former Minister of Economic Affairs and Finance for his country, Mauritania. Mr. Tar will assume office officially on the first day of September 2025 for a 5-year term when the tenure of Dr. Akinwumi Adesina will come to an end. John Mekwa, Channels Television News.
Fantastic news there for the African Development Company there. So now let's go to our first conversation. 2 years into President Tinubu's administration, we're still staying on that. Nigeria's capital market has defied expectations, surging over 100% despite inflation, currency swings and debt concerns. But How sustainable is this rally, and what is really driving it? To help us unpack the numbers, the reforms, and the road ahead, we're joined by economist and market analyst, Mr. Mukhtar Mohammed. Mr. Mukhtar, it's good to always have you on the program.
Thank you, Will. My pleasure.
Okay, so we're just looking at what's happening for President Tinubu's regime, his reforms, and the upheavals we've seen in the markets. How sustainable is the capital markets bullish run, given the lingering inflation and debt concerns we're seeing here?
Well, Will, the sustainability of the capital market is going to be a big challenge, definitely, because, again, if you look at that data that came out from the Nigerian Stock Exchange, you realize that about over 99% of, 92.7% are foreign investors that have left the market. And so most you have are the Nigerian investors, and they are mostly retail investors. And when you have retail investors, they are not long-time players. They are players that are there for the short time, and sometimes because they have needs for this fund to meet their needs, maybe immediate needs, school fees, house rent, and others. So it's always difficult for you to very difficult for you to see those sustainable bullish run. That's why you see, when you see these runs, after some time you see that the market will now go down a little, then profit taking comes in. But if you have those long-term investors, the foreign investors, that's when you begin to see those long-term sustainable bullish ones. So, and again, you don't have so much of institutional investors in the market that are there for like 2 or 3 years, because even the pension fund administrators have, it's just 25% they are allowed to invest into the capital market, and some of them prefer to put that in the fixed income space rather than the equity market itself. So definitely with that, you will not be able to see the kind of reforms that you should see. I mean, you won't see the kind of bullish one you should see in the market.
So let's very quickly, we see the all-share index when President Tinubu came into power. We saw the all-share index at 52,973 points. That was in May 2023. But currently, this year, what we're seeing currently is about 111,000 points, 818. What do you think? But if we look at it, just looking at those numbers, let's look at GDP as well. We see GDP in terms of figures in dollars at 187.64, and after the rebasing, we're seeing it at about 217. Don't you think that while the local market is booming here, we're seeing a kind of disconnect with the macroeconomics? That's the GDP is looking smaller, the economy is looking smaller. What do you think? What explains this paradox of record equity gains, and we're also seeing declining GDP in dollar terms?
Yeah, Will, you also have to know that reforms have different sectors that definitely get positivity. The reforms will affect positively. And again, if you look at the current reform of President Tinubu, you realize that the capital market has been the major beneficiaries of those reforms. So I'm not surprised that what you've seen in terms of the numbers, you realize that those removal of subsidy, floating of the naira, all was beneficial to the capital market, especially the financial stocks. If you look at those numbers critically, you realize that the kind of numbers in terms of appreciation that had helped the exchange to where it is was largely driven by the financial stocks. Because when you look at other stocks in those space, like the manufacturing, the telecommunication sector, you realize that sector were really those that were affected by the floating of the naira. You saw huge losses were taken by some of those conglomerates and companies. But when you look at the financial sector, you saw those positive numbers, and those are largely driven by the reform. And that reform also have driven a lot of capital also into the market up to this moment. The recapitalization of the banks is still ongoing, but again, you could see the positivity that is causing to the market. So those disconnect is expected, because what we have seen thus far, I think the only sector that really benefited from the Tinubu economy policy is the stock market. And in terms, when you look at the stock market, it also depends on which side of the stock market you are. If you're in the financial stocks, it has really grown by, most of the stocks have grown by almost 200%. If you are in that's when he came to power. And if you're in the oil and gas sector, so you've seen some stocks move by over 500%. But if you're in the manufacturing sector, you're in the cement sector, then you see that those stocks are just gradually beginning to recover when we have this corridor of stability in the FX market. So definitely, that's what is causing that disconnect that you are seeing, because I think the reform as it stands now is almost one-sided, basically helping those companies that are listed and also those companies that are in the financial sector.
Okay, so what do you think, do we still need more reforms, or do we still need more policies to be able to bridge this gap? What do you think should be done to ensure that companies are not losing money to FX losses, and also to see a recovery for sectors like small companies that are doing business in the country?
And we only one thing needs to be done: stabilize the exchange rates, and those companies will begin to enjoy the kind of returns that everybody expected them to do, and that will have a snowball effect into the market. If you don't stabilize the exchange rate, you continue to see some of these companies continue to bleed, and those small companies also will suffer. I keep saying that even if you don't, even if what we produce locally we can consume, the machineries to make it into finished good, we need to import it. So I think the government, I keep saying the government should look at those policies, looking at those machineries that will put some companies, those companies that import those machines, what can they enjoy in terms of tariff? And we've seen the president came out with those tariff policy that there will be zero tariff for agricultural items or food or household items, but that have not seen the light of the day. And then we need to attract more foreign investors into the market. We are not seeing that up to this moment, despite all the policy that have been driven by this administration. If you look at the data from the stock exchange that said over 90% of foreign investors exited our market, I think that's not good. So we need to stabilize the FX. Once you stabilize the FX rate, especially in a developing economy like ours, then you see the market will react positively, and then you see that every other aspect of the economy will begin to enjoy a little bit of buoyancy.
Okay, recently we had the president say that the economy is on course, but he also wants the economy to grow to a $1 trillion economy. Are we on course here? Is the capital market robust enough to give Nigeria take Nigeria to a $1 trillion economy? And take into consideration poor infrastructure, poor retail participation in the capital market. Can the capital market help to drive this ambition?
A $1 trillion economy is going to be elusive as it stands now, because to achieve a $1 trillion economy, you have to achieve double-digit GDP growth. And as it stands, we are struggling to even make 3.7, 3.4. So definitely that is going to be a mirage, because you have to achieve a $1 trillion economy, then you have to have a double-digit GDP growth for the next 10 years. I mean, or let's just say the next 5 years. You need to have a double-digit growth. So we are not saying that. So a $1 trillion economy is a mirage. But again, like you said, that should be largely driven by the capital market. And when you look at the companies that are listed in the capital market, how many of them are big players in the Nigeria economic space? You have not seen the Dangote. We're expecting the Dangote refinery to be listed. You expect NNPC to be listed. That has now been, or maybe even shifted, and that will not happen till the next 2 years. So those are part of the challenges that you definitely begin to see, and that's why I don't think that we'll be able to grow a $1 trillion economy as it stands now. We might try, but again, the GDP just have to improve. And when you talk about the GDP that will really have to improve, that we get to every part of Nigeria, is that informal sector. How are we able to galvanize that informal sector? How are we able to provide low-cost funding for the informal sector? How are we to bring infrastructure? How are we to reduce the high energy costs? All these things, if you factor them into what we have now, then the $1 trillion economy is a mirage. But it's not that it's unachievable. There's a need. There need to be a rejigging in terms of the economy policy, especially in regard to how you can help the informal sector grow.
Okay, we've just spoken about the big ticket players coming on board, which we are yet to see. What about the small players, the fintechs, ESG investments to diversify the markets? Do we see this coming into play, possibly holding the market up for that $1 trillion mark we're heading for?
Yeah, Will, that should happen because, again, if you look at the rebasing was done as a result of these fintech companies. So definitely that means you are getting a new player into the economy, and then there's a new player that have been able to raise Nigeria become the largest economy in Africa again. So when you have that in the exchange, definitely that will be a game changer. But again, that also will be a game changer for the fintech company, could also be a game changer for the financial sector. Because what we will see that a lot of financial sector are in the holding company leverage. And so once you have those holding companies, they're also having the fintech. Most of these banks are now holding companies. They have their fintech sector, and that will create a lot of competition. And at the end of the day, once the competition comes in, then the market is definitely going to benefit because the numbers are going to improve because of ingenuity on all sides to make sure that they're able to give their shareholders value. So that will be a game changer. Hopefully that happens when we see some of these fintech companies, which happen now these days, happen to be those that are really driving the financial inclusion, even in urban and rural areas. That, for me, would be a game changer.
Mokhtar, always great to have your insight on the program. As reforms we see continue and the market continues to mature, we'll be watching to see whether this momentum turns into meaningful growth across the wider economy. Thank you so much for joining us this morning.
Thank you for having me, Will. It's a pleasure.
Now, up next, we shift from the capital market to see how the farm gate is doing. The federal government's 180-day duty waiver was meant to ease food prices, but has it made a dent? That conversation right after this short break. Welcome back. Now, in July 2024, the Nigerian federal government implemented a 180-day duty waiver on importation of essential food items, including husked brown rice. And this policy aimed to alleviate escalating food prices and address food insecurity by temporarily reducing import costs. Well, let's discuss the impact so far with Mr. Peter Dhammer, as chairman of the Competitive African Rice Forum. Nigeria joins us from our Abuja studio. Good morning, Mr. Peter. It's good to have you on the program.
Good morning. It's a pleasure to be here.
We're just talking about rice here. It's one of the, is our staple food in Nigeria. And the price has been skyrocketing, but we've seen a decline. But we want to know if it has anything to do with the duty waiver. How did that duty waiver that was implemented, how did it affect the balance between imported and locally produced food items in the country?
Well, thank you very much for that question. I would want to tell you that, in fact, some of our senior colleagues in the milling industry, millers and processors, when these prices of foodstuff, particularly rice, came up, they were the ones who, brought up this solution and made recommendations to government of the Federal Republic of Nigeria that, some import quotas be given and then waivers be given so that it will crash down the prices of rice in particular. Now, when these solutions were given, unfortunately, those who participated, those who had in fact built up the rice industry in this country, were not, given the opportunity to, have the waivers for them to import this rice. And unfortunately, what we are seeing today, instead of the brown polished rice that is supposed to come into the country, we are seeing finished rice coming in, and at the same time, smugglers are also bringing in a lot of rice into the country, and that is affecting us, affecting the generality of the Nigerian rice value chain. And that's why we came and asked for the government to look at it once again and not to embark on this selective allocation of waivers. But if everybody is going to get it, particularly within the millers, they should be able to get these waivers so that a level playing field will be given to every other person, collect the brown rice and mill and sell based on what the government will, direct. So these are the issues on ground that, we're raising concern in as far as the waiver and import waivers are all about. Thank you.
You spoke about smuggling and that impacting the real reason why this import waiver was given in the first instance. Recent news, we've seen that illegal import of rice has flooded the country from Benin Republic. That's per boiled rice, and that has driven down the price of rice from about, say, 80,000 to 90,000 to about 50,000 naira. Where did this all begin? Where did this gap or this loophole, where did it start from? Are there no checks to ensure that the Hawks rice that was initially that was intended to be imported into the country is imported and not the finished rice you just spoken about? Sorry to butt in there, to hold your thoughts there, but right now for our DSTV viewers, we are going live for a TVET initiative press launch with the theme Advancing Skills, Empowering the Future, and that's being organized by the Federal Ministry of Education. That's for our DSTV viewers, but for our other platforms, we're still live, so we'll just continue with the program. So, Mr. Peter Dhammer, could you continue with your thoughts there and answer the question, where did this loophole, where did we get this gap? Where was the gap? How did people get the leeway to import, smuggle rice in and not go through the government channel that was provided?
Goodness me. Well, what I have said is like the issue of our porous borders have been there, and the smugglers have been active, not just now, but they have been there. And I have said that we have, at several occasions, made representations to the government, telling them about the activities of the smugglers. The Nigerian Customs Service has done their best, but we think that the Nigerian Customs Service should be well equipped with technology in order to track down these smugglers that have been coming into the country with lots of smuggled rice. But then, you had also spoken about the brown rice. The brown rice is something that the government, in fact, we, the millers and processors, our elders in the industry had met with the government and tried to provide this solution that, look, bring in these products, giving quotas and have waivers so that these things will come in order to crash down the price. We had hoarders who were hoarding, the product, paddy in particular, and there was scarcity. So government listened and went ahead, but unfortunately, as I said, the government, had a selective waiver given out to people that we believe are not even into rice milling to bring in rice. And instead of coming in with, polished rice, which we thought that would be given to millers and processors to process, that is not what the case is all about. So we are having very serious challenges in terms of disposing and marketing our products.
So with this decline we're seeing now, and also there's been a decline in consumption because of the cost of rice, obviously. What other engagement or what other platforms do you think you can engage the government to ensure that local farmers and industry stakeholders in policy making can ensure a balanced outcome, to ensure that we have self-sufficiency in terms of our rice production?
Well, there are lots of other areas that we can engage government, and what we are doing now is to talk to them. We have asked for meetings in order to, put this case before them. And we are also, talking to our members to ensure that they don't just close down their factories, so that we don't just fall behind, because in Africa, particularly in West Africa, Nigeria is considered as one of the greatest rice producing country. So what we have been saying, and we continue to say that and hammer on it, is that the waivers should not be selective. If there is going to be any waiver, let it be for everybody. Let all the millers, through either their associations or through their leadership, be given the opportunity. Whatever that is coming in should be distributed to the millers for them to mill and take to the market. At the government, when they sit down at the government rate, how much you are giving us this is it, how much you want us to produce, so that we also are able to make a little profit. So these are all the avenues that we've been looking at, and we have also been engaging with a number of development partners who are building capacities for our millers to be able to know and strategize on how to get into the market and ensure that we have self-sufficiency in all this sector.
So speaking of millers, speaking of the millers right now, how many mills are we looking at in the country to be able to shore up production and scale our rice production in Nigeria? Because looking at the data, the USDA forecast that rice imports is going to hit about 1.5 million metric tons for 2024 and 2025. How do we see that we have enough mills in the country to ensure that we are self-sufficient? We don't want to be going back to importation. The reason for the waiver is to allow Nigeria the time to be able to have a breather from high cost of rice, and also to give the local producers enough time to be able to sort themselves out. But what do you see? How many mills do we have in the country? Is it enough to be able to show up and ensure Nigeria is self-sufficient in rice production? Because you mentioned the millers, but how sufficient is the equipment and the tools we have in the country to ensure this?
Well, Nigerians have invested in installation of private mills. And we have integrated rice mills that are up to 83 in number. We also have 1 million small and medium-scale rice millers that are scattered all over the country. And I can tell you that we are able to produce well over 6.5 to 7 million metric tons, although that is just not enough for the Nigerian population. But then the gap that we are, we've been unable to meet, that is why I told you we suggested that the government can come in with some quotas and then these waivers that we've spoken of. But again, as I have continued to say, is that the waivers were just given selectively. Not all the millers who in fact prefer the solution for these effort to close the gap are given this opportunity. So we're still waiting, but we hope that as soon as it should be done as soon as possible, so that we're able to meet up with the deficit and gap that we've been lacking in the sector.
They're opening up their borders now. They import the restrictions they had on exporting rice, and we've seen rice flooding in. Rice consumption is possibly going up now. Do you think our local millers here, or local production, can compete with the global space in terms of consumption and production? And also, what do you see, what production do you see Nigeria scaling to before the end of 2025?
Well, if we have the encouragement, take note of this fact that there is no agricultural area that is not being subsidized, particularly rice in most of these countries where you see that the rice is being brought in. We will definitely be able to supersede even our demand, and we will in fact even export to other countries. Yes, we are competitive. Competitive because that I have said we have installed rice mills that are very efficient. We've, imported equipments that are also good. If you remember, in this country, during the COVID period, Nigeria fed itself, and Nigerians produced very good quality rice that was distributed. There was just no discrimination. It was as good as, the imported rice that we have in this country. So we have the capacity, we have the, what do you call it? We have the installed capacity that we can, be able to produce this rice efficiently and distribute to our nation or to our citizens for consumption, rather than depending on, the imported rice that is coming into the country that we are not too sure of their sources. And apart from that, take note that these rice are being stored, chemicalized, and we're not sure. Nigerian rice, as you know, is one of the very healthy and nutritious one, from farm to the mill and then to the market and to the table. It doesn't stay too long, and what you have, maybe within a few days, once you harvest from the farm, it is right there on your table. So we believe that we are able to do it, and we have done it. And I've quoted to you that during the COVID period, and even before the, waiver things came up, we were able to give Nigerians very good quality rice.
Okay, speaking of good quality rice, we've seen the influx of this genetically modified rice or farm products coming into the country. So we're talking about plastic rice here sometimes, that's what we've seen in the markets and on social media and some other parts of the country. What is your forum doing to ensure a check, to ensure that Nigerians don't consume poisonous rice or plastic rice, as to say?
No, let me correct this impression. There is no plastic rice anywhere. In fact, people just come up with the stories of plastic rice. There are researches that have been done. Anything plastic, by the time you take it to put it in the fire or in the pot to cook, it will melt. So all those things are not true. So I want to debunk that aspect that we don't have anything plastic rice coming into this country. What we are saying is that the rice that is being stored in the different countries that are coming in to Nigeria are rice that have stayed in the silos, chemicalized, and we are scared that, they might not be good for our consumption. And as such, we ask that such kind of rice should not be allowed to come in. But the issue now is like Nigerians, because of the little hunger and the problems they are having in terms of whatever, anything anybody finds and he thinks is good, he wants to consume it. But we are alerting that, necessary steps to be taken, particularly when the rice are brought in. They should be properly checked in order to ensure that they are good. But I want to assure you again that Nigerian rice is a quality one, and Nigerian rice is good, healthy, and nutritious for our consumption.
Thank you so much, Mr. Peter Dhammer. It's good to know that assurance Nigerians need to have that. Thank you for joining us, the chairman of the Competitive African Rice Forum. Thank you for joining us on Business Morning today.
Thank you very much. You're welcome.
Now on to other matters. As Nigeria becomes one of the latest to be accepted as a shareholder of the European Bank for Reconstruction and Development, there are questions on how this fits into the current plan by countries in Africa to become less dependent on foreign aid and financing. Our correspondent sat for a chat with the Managing Director, Sub-Saharan Africa European Bank for Reconstruction and Development, Dr. Aiki Amgat. Let's take a listen.
The time when Africa is seeking independence, especially financially, getting funding from outside the continent, how come EBRD is now interested in Africa?
Actually, luckily, we were interested in Africa before President Trump, and I think it was really triggered. We started 12 years ago in North Africa, and we really thought we have something to bring to these countries in supporting the private sector. And so now we still think we have a lot of extra capital, and then there was the debate started, sort of what's next, and we saw a lot of companies looking south of the Sahara, and we thought we want to be part of that story and really support economic growth through private sector investments. And so our shareholders decided we should expand to sub-Saharan Africa. And there were 6 initial countries, and they now are starting to become shareholders of the EBRD. And the latest one, our 77th shareholder, is Nigeria.
So Nigeria is now a shareholder, Cote d'Ivoire, and all the sub-Saharan African countries. What are the benefits, really, of being a shareholder of the bank?
I think the benefits are that you now have access to our whole capital base, so you can leverage really debt, equity investments into the Nigerian companies, but also projects in the infrastructure space, in the agribusiness space, across the whole economy now can benefit from financing from EBRD. But also, of course, we want to support trade, so we will guarantee trade finance programs for Nigerian banks who want to issue letters of credit for Nigerian exporters and importers. Hopefully we'll support Nigerian SMEs across the country, and sort of make linkages to existing clients of the EBRD in other markets, that we will promote Nigeria as an investment destination and hopefully accompany companies to invest in Nigeria.
So, I mean, being a shareholder is one thing, but how much influence or voice can countries like Nigeria have when it comes to the decision-making process as EBRD?
I think it was great to have the Minister of Finance of Nigeria at our global annual meeting just a few weeks ago, because this was the moment that EBRD decided on the next 5-year strategy. And there I think actually we have a number of strategic decisions that have 2 majorities, where you need the number of countries and you need the shareholding. So I think, every country counts. And then I think it was really great to see the minister spoke up in our General Assembly and really made a few points around sort of a number of the key topics like governance, like green transition, and how he really sees Nigeria, benefiting and coming in on digital. So I think yes, I think you can make a point. Every single investment in Nigeria needs to be supported by the Nigerian board representation. So I believe that each individual country can make a difference, and will also make a difference, I hope, because we're hiring lots of Nigerians now, both in Lagos, but also in headquarters and everywhere, because the moment you become a shareholder, everyone with a Nigerian passport can start working for the EBRD. So we just advertised our first 2 positions in Lagos. One banking analyst, we got 1,000 applications. It was crazy. So I really believe also you benefit in many, many ways from being a shareholder and being also then a country where EBRD invests.
So one of the conversations going on in Africa at this time is the cost of funding, especially because of the rating. So the rating companies have junk or low ratings, and so the cost of funding is high. So at what cost is Africa going to access this capital from the EBRD?
No, I think of course we are market driven. So in particular when we invest in the private sector, we really look at, of course, the market conditions. But we also, because we are really local, we really want to take the real risk, not the perceived risk of a project. So that's why we really invest also in understanding all the details of a local project, so that we really just price the real risk and not the perceived risk, which of course on the continent sometimes are different things. So we will look at market pricing, but we also are patient investors. So we stay long term, we have more patience in terms of them, so we're not in just for short-term financing. And we also mobilize others, so we mobilize green climate funds, we mobilize donors to blend if needed, to make the loans more affordable to both the companies, but also, of course, to the Nigerian government.
In all that you're offering, are there intentional policies and plans to get Africa independent financially, talking about the capitals, or even with skills and human resources.
Can attract a lot of the Nigerian pension funds into long-term investments. And so we also help companies in the stage pre-listing, so to really encourage companies to also utilize capital markets as a way of accessing sustainable long-term finance. So I think that's sort of an area, a big focus is on local capital markets. And maybe another area is also on local currency financing. So we really want to finance in Naira. So we're having really great discussions with the central bank governor. I saw him in DC, and I saw him in Abuja not so long ago, and we're really discussing how can we, make sure that we have competitive Naira so that if we finance a Nigerian business that is not an exporter, that they don't take additional currency risk. So I think that's capital markets and local currency really important.
Oh, interesting that you have the local currency financing. How does that work?
In Egypt, we, for example, swap with the local bank. In Jordan, we swap with the central bank. In some countries, we issue local currency instruments. So in Morocco, we recently launched a green bond with rail companies. So we have different ways of accessing local currency that we then on-lend to businesses in the country so that they don't face FX risks that they can't themselves mitigate. So I think that's a huge important aspect. I have to say it doesn't always work. So in some countries it's really difficult to be competitive, and then we get very expensive local currency that nobody wants. So I think we really need to, but in most of the markets we've been really successful in attracting swaps that work really for the local business. And I think that's a really important one. I think we learned our lessons, 20, 30 years ago in Europe when also there was a lot of devaluation going on, and I think that companies suffered from having too much euro debt. So it doesn't always work, but it's a huge ambition for us to increase our local currency financing.
That's still the bane of the matter in Africa. How do we cut dependence on foreign aid since the U.S. cut funding to Africa? How will Africa work together to be self-reliant and be independent from foreign aid? That's the question still. That's our business editor in John Mekwa having that exclusive interview there with the EBD Managing Director for Sub-Saharan Africa. Now to the global space now. We see that President Trump has been, his tariffs has been reinstated, but I think Ladi has got the story for us there.
Yeah, yeah. Great to switch roles.
Yes.
at this point.
At this point, it's great to be on the side and, talking to you on the other side.
Yeah.
But no, it's Trump, and I remember that what you said yesterday, Trump always
trade,
chickens out, taco trade.
We need to stop saying that, though. I hear he doesn't like that.
But
so
it's so
like,
good off the lips. You just say it runs very smooth. But looking at what the court has just done now, the Court of Appeal reinstating these tariffs. What next?
So
what next?
Definitely, we know that investors are spooked, with that update, at this point. But some are still quite optimistic that somehow, maybe if this goes to maybe the Supreme Court, they might actually win, this one. But at the end of the day, there's still that uncertainty, at this point. And we know who loves uncertainty.
Gold. Gold loves uncertainty.
So,
but we don't want uncertainty in the equities market, do we?
All right, so definitely. We'll see how investors react, going forward. But let's get a check on what's playing out in the global space now. See, the Bank of England Governor Andrew Bailey has called on the UK government to pursue deeper ties with the EU, particularly in financial services, to help offset Brexit-related economic headwinds. Speaking in Dublin, Bailey said reducing non-tariff barriers would ease regulatory friction, boost trade, and support growth. His remarks follow Prime Minister Keir Starmer's new reset deal with Brussels aimed at softening trade barriers. Bailey stressed the need for cooperation in areas like financial regulation and warned of added urgency amid U.S. tariff threats. And moving on to Sweden now. See, Sweden's economy shrank by 0.2% in the first quarter of 2025, according to final figures from the National Statistics Office, missing analysts' expectations for slight growth. Year-on-year, GDP grew 0.9%, down from earlier estimates of 1.1%. The revision shows a modest contraction, contrasting with earlier projections of a flat quarter. And President Donald Trump says he will hold a press conference with Elon Musk today, calling it the Tesla CEO's last day in the administration. But Not really, as Musk will still help all the way. The move follows Musk's quiet exit from his role as special government employee. His controversial stint leading the Department of Government Efficiency, DOGE, that drew criticism over job cuts and missed targets. Musk's exit also comes shortly after he criticized a Trump-backed tax. And a U.S. federal appeals court paused a lower court ruling that struck down most of President Trump's tariffs, allowing them to remain in place for now. The stay gives the Trump administration time to argue its case while preparing for a potential Supreme Court appeal. Officials say alternative tariff strategies remain on the table if they ultimately lose the case. And U.S.-China trade talks are a bit stalled and need President Trump and Xi to weigh in directly. Treasury Secretary Scott Bessent did allude to that yesterday. Despite a 90-day tariff truce agreed in May, tensions persist over U.S. tech restrictions and China's rare earths control. Bessent expects more talks soon and believes a Trump-Xi call could revive momentum. Beijing, meanwhile, criticized the U.S. for revoking Chinese student visas and urged Washington to correct its wrong practices. And so next discussion out, tensions between the U.S. and China continue to simmer even as both sides agreed to a temporary reduction in tariffs. What's the real impact on China's economy and how resilient is it in the face of mounting pressure? To unpack this, we're joined by John Ashbourne. He's a director of emerging market economics at Fitch Solutions. Good to have you on the show.
Thank you for having me.
So, with the U.S., walking back some of those heavy Trump-era tariffs, does this take some pressure off China's economy, or are there deeper trade wounds already done?
It certainly takes some of the pressure off. So the numbers that were announced earlier in April, we're seeing U.S. tariffs on China of over 120%. It's really important to stress that that's just an absolutely ludicrous number for a tariff. It's incredibly high. You don't see that almost anywhere in the world. So moving down to 40%, which is still high, but is no longer out of the bounds of what you might see, that will provide a bit of a boost to the Chinese economy, or I guess we could say remove a headwind. I mean, at Fitch Solutions, we think that the Chinese economy will grow by probably 4.5% this year, which is not a great performance by China, though, of course, compared to most countries, quite a strong one.
And we see, China cuts tariffs on one hand, but tightens, rare earth controls with the other. Is that a clever balancing act, or could it, backfire economically?
Well, actually, I think it's an incredibly good card for China to play, and it really underlines how dependent most of the world is on China's rare earth processing. And the interesting thing to really keep in mind here is that manufacturing industries in the US and Europe and Japan are all dependent on China's rare earths. But China doesn't actually make a lot of money selling rare earths. Their total exports of rare earths last year were less than $1 billion. So when the Chinese turn off the tap for this, they don't experience much pain themselves, but it causes really serious or problems for manufacturers elsewhere. It's actually a pretty painless card for them to play compared to tariffs, which of course hurt both sides.
And we've seen companies like Apple, slowly shift away from China. Is Beijing losing its grip as the world's factory floor? And what does what does that mean for the economy if this trend actually continues? Because I've heard some instances of China is already losing that ground at this point with some companies moving out their factories from China.
Well, you're absolutely right that some foreign companies are moving away, or they're trying to diversify. They'll produce in China, but also in other countries. Apple's a good example of that. But it's important to remember that that's only the foreign companies that are active in China, and that's actually quite a small share of China's whole manufacturing base. So even if it's the case that Apple will be the biggest example, but the other American, the other Japanese companies that build in China decide to build more of their products in Vietnam or in India, even if that happened, it doesn't affect the vast majority of China's manufacturing, which is local companies. And so China is the world's biggest producer of manufactured goods by far, over twice the US and Germany. So most of that is domestic. A lot of it's aimed at the local market, and even if it's aimed for exports, it's made by local companies. So fundamentally, even if the Japanese and the American and the European companies that have invested in China were to diversify, were to move away, that's a little bit unfortunate for China, but it isn't a huge problem because they've got this huge domestic industry and that's not going anywhere.
So, how much of this trade tension do you think the Chinese economy can take, at this time before it cracks or before we start to see some cracks, especially in exports and, manufacturing? Or is the China economy, strong enough to absorb all of this?
It's a pretty strong economy. I mean, there's a lot of problems. So we could look at the real estate sector, for instance, consumer spending, but it's important to remember that China's economy just isn't as dependent on exports as it was 10 or 20 years ago. I think people have often quite a backwards-looking view of the Chinese economy. If you look at China in 2005, this was a poor country that mostly got its growth by producing goods for rich consumers in America, in Europe, elsewhere. China in 2025 is a much richer country. They produce a lot for their own use. They have a huge domestic market. Even if they don't export much to the US, they can still export. For one thing, they can produce for domestic use, but also they can export to the rest of the world. They export a huge amount to Southeast Asia. They export a huge amount to Africa. So the capacity of the US to really put a block on their growth is much smaller than it was 20 years ago. 20 years ago, 20% of what China exported, they sent to the US. Today, it's less than 10%. So these create headwinds. They'll slow growth. As I said, our forecast is growth of 4.5%. That would be lower than the government's forecast. That would be much lower than we've seen in recent years. But growth of 4.5% is hardly a disaster. This is still an economy that has a lot of objective strengths to it and that still has a pretty positive outlook.
All right, so definitely, I know you track, most of these economies and countries, but, with what we're seeing, in the global space right now between China and the US, do you think there's an underdog country, sitting in the corner that has potential to step in here and profit?
Well, that's a very interesting question. I think that's probably the billion-dollar question for a lot of people. There's probably a few. So if you look at what happened during the trade war that Donald Trump had against China during the first time he was president, so back in 2019, one of the big winners of that was Vietnam. Because when the US put tariffs on Chinese goods, Vietnam really ramped up production of the same products and they sold them to US consumers. And of course, it was cheaper for the Americans to buy the Vietnamese good than the Chinese one because of the tariff difference. And this was a real boon to Vietnam, similarly Cambodia, a few other Southeast Asian countries. Now, it might be harder to play that kind of game this time because the US is putting tariffs on everybody, not just on China, and they might crack down on goods sort of being redirected. But yeah, this certainly creates opportunities, mostly I'd say in Southeast Asia, but potentially in Mexico, in other countries that have the capacity as manufacturers to produce goods that American consumers are used to getting from China and that'll now be more expensive. There's also some possibility even in Africa, if we look at textiles. Obviously, AGOA, the trade agreement between the US and Africa, is probably not going to be continued, and that's very bad news. But with a big tariff on Chinese goods, that might make it more competitive if you're producing textiles, other things in Ethiopia and in Kenya, even Lesotho. So there are opportunities everywhere. The China-US relationship is a huge amount of trade. The trade between just Chinese exports to the US is about $600 billion in 2024. So if you disrupt that, if you stop that flow of money going and that money has to find somewhere else to find those goods, there's a lot of that to go around. And so even if a fairly small country, a Cambodia, a Kenya is able to grab a pretty small fraction of that's real money for an economy that's not the size of China. So there's opportunities there. It's hard to see exactly who'll win, but I'd point to Southeast Asia probably being best placed.
All right, we'll definitely be watching out, for that. John Ashburn, thank you so much for coming on today. He's the Director, Emerging Market Economics at Fitch Solutions. Thank you for coming on today.
Thank you very much.
All right, so Will, there you have it. I see markets and businesses, countries moving in cycles at this point.
Definitely.
Might be big today, but
might
tomorrow
might be small.
Somebody else might take over that
and
position.
You mentioned that underdog. You talked about countries like Africa, textile. Those industries might be coming up now, and Africa might just be the spot, the sweet spot where everyone comes to, get. You mentioned cheap labor. We would probably see those companies running down to Africa to develop and all.
Well, let's give them that enabling environment.
Of course, definitely. And that's where we wrap up Business Morning for today and for the week. Don't forget, you can catch a replay of this on our digital platforms. And Ladi Williams is back 1 p.m. with Business Incorporated. I'm Will Ibong. Bye for now.